Hello traders, welcome to another weekly market setup ideas on ChartsEmpire Trade Institute. In this weekly Forex market setup ideas or forecast, I will share with you my views on the Forex market for the coming week ahead. Interested in the weekly commodities market setup ideas or forecast on gold, silver, palladium, platinum, corn and sugar? Check the description of this video. Before we go through next week's market setup ideas, let's quickly recap last week's market setup ideas. Last week, I analyzed a bearish pullback before buying the British pound sterling paired against the USD, and the analysis played out as analyzed. It was a great trade. USD Canada. I stated the market was at a critical zone for a buy entry, and I would like to stay out of this currency pair. The market went crazy as analyzed. USD ZAR. I analyzed the market as a potential bearish price swing, and the currency pairs went as analyzed. New Zealand Canada. I analyzed a potential bearish pullback before buying the currency pairs, and the market went as analyzed. Canada switch. I analyzed traders should watch out for a potential bullish pullback before selling the currency pairs, but the bears never allowed a bullish pullback. Instead, the market precipitated aggressively down as analyzed. Therefore, pay attention to this week's market setup ideas because the coming week could offer trading opportunities that could increase your trading portfolio beyond your expectations. Alright, with that being said, let's get down to business. The first currency pair on the list is British pound sterling paired against the USD. There is a psychological level above the price at 1.32000. Next week, buyers need to be very careful not to buy into this important resistance zone. It is better to wait for a bearish pullback to the previous higher high swing at 1.28392. As you can see, the application of the Fibonacci retracement tool from the last higher low swing at 1.26000 in this uptrend to last week's high at 1.31441 revealed that the previous higher high swing at 1.28392 aligned to the 50% and the 61.8% Fibonacci retracement zone. Therefore, it is technically safer to anticipate a buy entry at this zone. Alternatively, a bearish push below the previously major broken resistance level at 1.26813 could be the next potential support for the price, and this could offer a confluence factor zone because the price could find aggressive bullish rejection at the intersection of the major horizontal key level and the uptrend dynamic support trend line in this bullish trend. A bearish swing to this zone within a week could require a heavy bearish push or could take days or weeks under normal market conditions. Next on the list is Euro paired against USD. The price made a slight bull close above the psychological level at 1.2000 on Thursday, but an indecision bar ended Friday trading activity. Technically, the bull bar on Thursday has characteristics of a bull climber bar, and this could result in a bull trap for traders. Also, measuring the price objective from the starting point of this bull pennant from the higher high price swing at 1.06353 to the lower descending starting point of the pennant gave 2.57% appreciation. The replication of the 2.57% from the broken point of the pennant revealed the price went further than its objective into the cycle price level at 1.2000. Technically, Measurement objectivity is not a guarantee because it could be lesser, more accurate, or higher than expected. Technically, it will be safer to watch out for a bearish pullback to the last high zones at 1.10330 / 1.10773 before anticipating a long position. My minor key level at 1.10330 cut through prices at this peak because I treated these multiple tops as false breakout swings. The application of the Fibonacci retracement tool from the higher low swing of the pennant at 1.08341 upward to the high price on Friday bar revealed the 50% Fibonacci retracement level intersects the 1.10330 and the 61.8% intersects the peak of the bull pennant at 1.1000. Alternatively, a bearish close below the minor previous broken resistance zones at 1.10330 / 1.10773 would suggest a possible test of the rising trend line in this uptrend. Take note, it takes 2 points to construct a trend line, but it takes 3 points to confirm a trend line. Also, based on my trading experience, a trend line is a kind of deception technical tool, and it is wise to blend trend lines with other technical factors in the market. Next is Australian dollar paired against the USD. I executed a buy position at the bullish breakout of the range structure or double bottoms on the 4-hour chart, and it was an awesome 3.5 risk to reward profit result last week. Are you a struggling trader, want to learn, trade, and earn along with me? Use the link in the description of this video to join my traders community today and amplify your trading success. Next week, I am expecting a test of the minor key level at 0.67935 for bullish technical price action. Bullish sentiment traders take note that a multi-year major dynamic descending trend line is active right above. Therefore, it is better to risk less in a buy entry. A bullish test of the upper multi-year major dynamic descending trend line could interest sellers to push prices down. Failure of the support at 0.67935 to hold the price would suggest a potential test of the broken neckline of the double bottoms at the 0.67042 price level. Failure for the 0.67042 price level to hold price would suggest a potential bearish test of the rising trend line. Next is the New Zealand paired against the USD. I executed a small position size breakout bullish entry based on the multiple confluence factors on these currency pairs. 1. There was presence of high volume. 2. Rising double bottoms. 3. Breakout of hiding inverted head and shoulders structure. 4. Formation of higher low swings to the breakout of the massive bullish flag. 5. Continuation of previously weekly setup bars formation. I exited the position at 0.5 reward ratio before the close of Friday bar due to the hold of price at the minor resistance of 0.63807 and the psychological level at 0.64000 price level. Next week, I am expecting a bearish test of the minor support level at 0.63048 before washing out for a bullish price action entry signal. Failure for the minor support level at 0.63048 to hold the price would suggest the next potential minor level to wash is the 0.62410, which is the neckline of the rising double bottoms. Don't forget to study the 50% and the 61.8% Fibonacci retracement structures based on the last higher low swings at 0.60517 to the high of the Friday bar at the psychological level of 0.64000. Failure of the minor support at 0.62410 would signal a bearish trap of the massive bull flag and the multi-year major descending trend line from the peak of October year 2021. This bearish move could lead to the test of the major support level at 0.60842. Interested in my weekly cryptocurrencies, stocks, index, and bonds market analysis watch list? Use the link in the description of this video to join my traders community today. The last currency pairs on the list is the New Zealand pair against the Canadian dollars. I executed a small position buy entry based on the early entry bar on the 4-hour time frame, and I waited to scale up my buy position at the bearish pullback to the major broken support structure at 0.82713 last week. Unfortunately, my buy limit order wasn't executed, but I closed the first buy entry from the 4-hour time frame in 3 risk to reward ratios. Next week, I am expecting a bearish push from the upper band descending trend line of this massive bull flag to the major support structure at 0.82713 before looking out for a buy signal. The application of the Fibonacci retracement tool aligned to the 38.2% retracement tool of the major key level support at 0.82713. As you can see, this would result in powerful confluence zones, which are confluence factor number 1, presence of high bull volume; factor 2, retest of falling double bottoms chart pattern; factor 3, retest of major key level structure; factor 4, pullback test of bullish engulfing candlestick pattern; factor 5, possible formation of higher low swings at the major key level support at 0.82713 or the 50% Fibonacci retracement level. Take note, no trading system or setup that is infallible in the market. Please trade wisely and implement a reasonable risk entry and money management system. Failure for the neckline of the falling double bottoms to hold price would suggest a potential test of the lower band descending trend line of this massive bull flag falling channel. Alternatively, the price could gravitate and close above the upper band of the massive bull flag falling channel. It would be safer not to buy into the lower high swings at 0.85365, but to wait for a bearish retest and bullish rejection of the confirmation of the broken upper band resistance structure as a new potential support descending trend line. Want to keep up to date with my latest uploads on this channel? Kindly click on the subscription button or follow this page and tap on the notification icon not to miss my next updates. Looking forward to seeing you all in the next video. Peace.